Taylor says I have a scenario question for you. Sure. Do you want to type it in right now, Taylor? What I'll do is I'll save it and I'll make sure to fit it in. Okay. Let's say that is December of this year, and you have a kid that just became a consistently profitable trader. Nice. Congratulations. He has been trading live for a couple of months with a small account and with consistency of being profitable or positive, excuse me. And he has $6,000 to invest. He has the option to invest that $6,000 into his trading account or into a Roth IRA. What would you personally advise him to do? Well, you know I shouldn't personally be giving investment advice anyway. That's against the law. Disclaimer. But I can give my opinion. But I'd love to hear what you guys say first. So again, the question is, let's say it's we'll get to the end of it. We have a kid that's become a consistently profitable trader. He's been live for a couple months, and he's been doing well with a small account. He has $6,000 to invest, and he has the option whether to take that $6,000 and put it into his trading account or put it into a different type of investment account. What do you think this kid should do? George says 5 to 10% a year or invest in yourself and get a higher percentage. That's the comparison. Do you get 5 to 10%? Let's say 5 to 12. 5 to 12% a year from your investment account? Or do you trust yourself to make more than that? Naomi says depends on your trading goal. Depends on what your trading goals are, in my opinion. Split it. Put it all on a horse. Yep. Put it on that horse that kicked the jockey off. He did pretty well. He beat a horse with a jockey, so imagine if he had a jockey, he'd probably do even better. Lat said I'd spend 3 to 4K on your account and invest the others to turn your profitable trading into a business. Have insurance. So Lat, you're saying take 3 to 4K of that 6,000 for your trading account, and then take the leftover 2,000 and use that for business expenses. Just want to make sure you're not saying split it between. Okay, not saying split it between the IRA. Okay. Taylor said the reason I'm conflicted, he's conflicted. You can't see me wink, so I just made that noise to kind of, I got a sticky eye. That's the winking sound. The reason he's conflicted is because, as you know, you only have that year to invest $6,000 in the Roth IRA before you can't invest it in 2019 again. Well, I would start with these questions. One, how old is this? How old is he? I have a good idea. Pretty young, I believe, right? Yeah. And what are his goals? Are there long-term goals of him? Are there long-term goals of him wanting to be a consistently profitable trader? I think that's the other thing we need to think about. You want to assume the answer is yes, because he wouldn't be making the investment in learning how to trade if he didn't plan on eventually being good. I would say this we'll start from a number standpoint. From a number standpoint, because some of you guys are very quantitative in that sense. Line up the expectations, right? If you're doing an investment account, it's probably gonna make you 5 to 12% a year. Okay? Look at your trading numbers from your back testing, and obviously take a few off from that because live trading is a little bit different. But ask yourself, would your trading make more than 5 to 12% a year? Would your personal trading make more than 5 to 12% a year? And then you look at the numbers. If yes, then that's the better investment. If no, then it's not the better investment. So you can look at it from a simple perspective as in that. What's the better investment? 5 to 12% a year from an investment account, or whatever my back testing said it would be. That's one way to look at it. Another way is to think about it this way. So if you end up working another job or have a career, if you get a good job, there's a good chance that that company is going to help support you with a retirement account, right? So you're already going to have, again, if that's the case, you never know the situation, but if that's the case, you're already going to have that retirement account, that investment account, I should say, set up for you. Now, I know it's not the same, but you're always you're gonna have that set up for you as well. So you don't necessarily need two long-term, low-risk investment accounts doing the same thing. Lastly, I'm always a fan of when you're young, you can take more risk. And they'll probably tell you this when you're doing, and if you want to take control of your investment accounts as well. When you're young, 23, you can take as much risk as possible because you have so much more time to make up for it. So much more time. When you're older, you're in the 70s, you probably want to be risk-free because, again, you want to protect that capital. But when you're young, you can take as much risk as possible. So I would always bet on myself when I'm younger. The risk of becoming a trader on your own is higher because, obviously you have the chance of blowing your account and whatnot. That's not typically going to happen with an investment account. But the upside is so much greater as well. You can produce so much more with that trading account. And if you want to look towards the future, if you ever want to separate down the road, once you start creating profit with that trading account, you can then take a certain amount of that profit and then throw it into an IRA and make that kind of a goal. At the end of every year, I take 10% or whatever percent you want out of my earnings, and I put that into an IRA for kind of a safety reason. And now you have a short-term wealth accelerator and you have a long-term wealth accelerator. And then, of course, if you plan on starting a business or anything like that, that's a whole different story, and that has to do more with what you do with your profits. But I would bet on myself, especially being young. I mean, you're in here learning for a reason, right? We're not just here learning so we can have someone else manage money for us. We're learning so we can take control of our finances, right? We're learning so we can take control of our investments. And it doesn't mean that it has to be the only investment. I'm a big fan of diversification. I think you should have multiple investment accounts. But I also think one of those investment accounts should be you controlling your own investments. And that's going to be your high risk, high reward one. So, and I wouldn't even be last. So you can put 1K into account, but trade with risk management. Okay, I got you. Okay, I thought you were saying split between the IRA and your account. So that's my that's my personal opinion. Young, dumb, and full of fun. That's how it goes, right? So does that help, Taylor? If anyone else wants to lend an opinion, feel free. I would definitely bet on myself. Why not? This is the time when you do it. Yeah. This is you do it now instead of when you're 60. You have the luxury, and I'm sure a lot of people listening to this are jealous. They're like, man, I wish I started when I was 23. Because you can mess up for years, and you don't have a lot of, I'm assuming you don't have a lot of responsibilities, or as much responsibilities as someone that has a couple kids that are getting ready to go to college, something like that. So yeah, I would definitely bet on yourself. Now, it doesn't mean you have to put the whole 6K in. You can average yourself in and treat yourself like a prop firm where you reward yourself based on your performance. But yeah, I would do that. You can your IRA's not going to make much anyway. So, or wait till the whole stock market crashes and then start loading up on your investment accounts. So good stuff. Any other comments on this question? That was a good one. Good way to kick things off.